Hi, this is Lara at Elliott Wave Stock Market with your twice weekly Apple analysis. This analysis is done Monday, 10th of June. I'm recording this video now, 10 past 6 in the evening New York time, Monday the 10th New York time. My daily chart for Apple remains exactly the same. I'm still seeing the start of a supercycle degree second wave correction here at the all-time high, and within supercycle wave 2, it's most likely to be a zigzag, and cycle wave A is most likely to unfold as a 5-wave structure. This is not a leading diagonal, so we're probably seeing an impulse unfold to the downside. At primary wave degree, we have within the impulse primary 1 and 2 complete, primary 3 probably extending. At 272, primary wave 3 will reach 1.618, the length of primary wave 1. Within primary 3, we have a 5-wave impulse for intermediate wave 1 complete, a running flat correction for intermediate wave 2 complete, and at 289.78, intermediate wave 3 would reach equality in length with intermediate wave 1. Within intermediate wave 3, we have minor wave 1 complete, minor wave 2 most likely complete. If it's not complete, and we won't have that confirmed until we see a new price low below this point, if minor 2 moves higher, it may not move beyond the start of 1 above 465.75. If minor wave 3 has begun here, then at 381 it would reach 1.618, the length of minor wave 1. Let's have a look at what's happened in the last few days for Apple on the hourly chart, where the start of minor wave 3 up here is this point up here. So we got more downwards movement, falling just $2 short of my target for the short term before price turned back upwards. This upwards movement, importantly, on the 5-minute chart looks very much like a correction. It has a corrective wave count. So it looks like, because this is overlapped back into wave 1 price territory, that we may have a leading diagonal unfolding in a first wave position for minute wave 1, the first wave within our minor degree third wave. So within minute wave 1 we have 1 and 2 is 0.81, the length of 1, 3 is an impulse, 4 is 75% the length of the third wave, so the second and fourth waves are comfortably within the common length of 0.66 to 0.81, the prior wave, for a diagonal. For a diagonal, the fourth wave should overlap into the first wave price territory, which it has, but it may not move beyond the end of the second wave of the diagonal. That's why the invalidation point is at 454.43. I think it is highly likely that minuet wave 4 is indeed over and it won't move any higher. But if I'm wrong and it does, then it may not move beyond the end of 2, so that's why I'm leaving the invalidation point up there. I'm most likely expecting that we're going to see downwards movement for Apple, and for a leading diagonal the fifth wave must make a new price extreme beyond the end of the third. For a leading diagonal it may not have a truncated fifth wave, so for this wave count we must see a new low below 432.77. The diagonal is probably expanding. Well, it certainly looks like it, because the fourth wave is longer than the second and the third wave is longer than the first. For an expanding diagonal, you'd expect the fifth wave should be longer than the third. That means we should see price move below 427.42. That's the point at which minuet wave 5 would reach equality in length with minuet wave 3. So that's quite likely for price to get below that point. However, I have seen diagonals where the third wave is sometimes still the longest, a bit odd, a bit unusual, but it certainly does happen. So I'm really confident that we should see a new low below this point, and reasonably confident that we should see movement a bit below this point. When we know where A and B within the probable zigzag of minuet wave 5, or 1, 2, 3 and 4 within the possible impulse of minuet wave 5 are, then we can use the wave degrees within the fifth wave to calculate a more accurate target. If it takes its time, I may be able to do that at the end of this week when I next analyse Apple for you. For this wave count at the daily and the hourly chart level, There's a lot of choppy overlapping and hesitant movement. I would be more confident with this wave count if we see price movement below 418.9. That's the end of minor wave 1. At that point, I would be reasonably confident that minor 2 is over and may not continue further, and at that point, a core Elliott wave rule which says the third wave must move beyond the end of the first wave would be met. So I was expecting downwards movement from my last analysis of Apple, and I had a short-term target. Price did move lower, falling $2 short of that target before moving higher. The upwards movement that followed the target being fallen short of has overlapped back into wave 1 price territory, so we're not seeing an impulse unfolding downwards, we're seeing a leading diagonal. It's not complete, we need a new low, but when that's done, look out for a following very deep second wave correction. That's really common following first wave leading diagonals. That's all for me today with your Apple analysis, and I hope that everybody out there had a fabulous weekend.